morning, ladies and gentlemen. The markets are not showing signs of any kind of hopeful recovery as far as Monday is concerned, and they are lightening themselves ahead of the budget, which is on 1st of February. We continue with our endeavor to provide you with quality inputs as to what calendar 2026 can hold for equities as also other asset classes, and of course how third quarter earnings will pan out. We get you the finest brains on the Lal Street, people who have navigated markets in all sorts of manners, whether it's volatile, bearish or bullish, and they will now provide perspective on what their expectations from the current calendar are. Joining us on the show is Mr. Yogesh Patil. He is the Chief Investment Officer for the equity part of LIC Mutual Fund. Namaste Yogesh ji, a warm welcome. नव वर्ष की आपको बहुत बहुत शुभकामनाएं. 2026 seems to have started on the back foot. What are your expectations from this calendar, despite a very painful 15-18 months that we have already endured in equities?
We do see some positive uptick from here, because last 15 months we see FIs are going out from India. Almost they sold $20 billion, and then again earning weakness followed by liquidity tightness. Now all these things are reverse except FIs inflows, and we do see improvement in basically credit growth, which is driven by obviously interest rate cuts, structural reforms done by government, and in, tax cuts which will fuel the consumption, and we do see improvement in capex-led growth also. So FY calendar year FY26 could be a better year compared to last year, like CY25, and because these are the key parameters we do see which is completely change the direction of the market. May not be drastically, because there are a lot of things has to change to take the market at next level, but it seems to be a next 15 months could be better than last 15 months. That's what we discussed during this conversation.
Okay, fair point. That's a sensible thing to say, that next 15 should be better than previous 15. But in terms of allocation strategy, Patil Saab, where are the thought processes? We are also at the cusp of third quarter earnings. What is the research team at LIC Mutual Fund hoping for in this quarter?
That's Q3 we are expecting a better than Q2, because Q2 was impacted due to certain announcement on GST for an extended monsoon and plus elections also. So we do see improvement or normalization in Q3. Q3 results will be better due to all these factors, and the impact could be limited what we've seen in Q2. And if you see by sector, even catch-up game is picking up in basically IT. We don't see a major recovery, but obviously commentary is positive, neutral to positive, and cost takeout deals is taking the lead basically. So everything is normalizing. Auto sector shown a very good growth. FMCG is still picking up. We are still expecting a mass consumption yet to pick up. Selected capex driven companies or sectors showing up a good progress and results. Those are the we keep expectations. So it will be on net basis, including BFSI segment, credit growth is picking up. So on overall basis, Q3 seems to be better than Q2.
Okay, fair point. Now, when you look at the broader structure of the market, Patil Saab, the rally, the fabulous rally that we saw on precious metals, gold and silver in 2025 is now continuing. In fact, today silver is at a record high. It was up 10,000 rupees in the morning. How are you integrating this view in your earnings calendar as far as metal spaces are concerned? Look at the record highs on National Aluminium, Hindalco. Is this a space that LIC Mutual Fund is still finding attractive?
Definitely, some of the precious metal we do like, and we do have a multi-asset fund where we actually buy gold and silver here also. I'm not very sure whether investor will get similar kind of returns seen in last year, but definitely there is a global shift moving towards basically there is a difference between the currency and money. So to protect the value of the currency is moving towards all these metals, and we don't see any changes happening because most of the central banks actually buying gold and storing their value, because after whatever happened after 2022 Russia-Ukraine war and what has happened recently, I think it's very difficult to trust one country on one currency. So this is the new theme for most of the global countries, where they need to protect the value of their reserves, and they need to trade, because you never know, depending on one currency and similar currency actually will do similar kind of what we still are running what we've seen in last 20 years. So definitely next 20 years could be very different. To protect the value and reserves, we do see still we have positivity in this kind of commodities, and there will be a structural change after some time. Whenever the currency reset will happen, then only we can see some softness. But till now, it seems to be most of the investor shifting their value towards the commodities.
Okay, fair point. Are you an aggressive buyer at this point of time of silver?
I won't say aggressive because we can't comment on basically aggression, but it seems to be you cannot ignore. That's the only point. You need to be present somewhere, because again, the silver has an industrial use also. Silver has a lot of other uses also. So it is a combination, and the supply of gold and silver is also not going up. That is also pushing the prices.
Okay, fair point. Let's take this argument a little further on interest rates. A lot of good bond offers are coming in the market at 7.3% coupon, as also the fact that RBI is very keen to further kickstart growth in the economy. What is your view on the interest rate cycle at this point of time?
See, interest rate cycle is again, we are positive that this year we may see 25 bips of cut on interest rate, and definitely this will add the consumption and overall economy. But we need to be careful about currency, because globally, yen, the unwinding of yen carry trade could be dangerous for a country like India. But at the same time, RBI also mentioned that we are in inflation, we are in comfortable zone, and considering inflation and considering what is happening, they are comfortable with cutting rates. So we think at least this year would be slightly cut. It's very difficult to time when going to happen, but it seems to be based on what they commented on media and last meeting. The 25 bips could be possible.
Okay, fair point. 25 you think is coming in. Fair point. With that point in mind, Patil Sahab, LIC is a major player in the bond market. Where are you structured as far as the tenor is concerned in terms of buying fresh AAA paper or AA paper? Are you looking at the long coupon, or is the short end looking attractive to you?
I cannot comment on parent strategy, because basically I am from LIC Mutual Fund, so we are subsidiary. I'm just responsible for equity part, so I can't comment on my colleagues' part also. I'm really sorry for that.
Okay, not a problem. Fair point. What about the defense space and a view on the chemical sector? Any fresh purchases that LIC Mutual Fund has done on these two sectors?
Yeah, we are positive on both sectors, and slowly we are increasing the position as well, because certain chemical segments or sectors showing a good traction. And at the same time, China has also reduced their incentives to all export-driven companies. So that is actually stabilizing the prices, not for chemical, all sectors. And same time, Chinese government also mindful about the profitability of the companies and sectors. So it gives a positive signal to all Indian companies to some extent. But again, chemical is a very wide sector. So we are at this point of time, we are avoiding the commodity chemicals, and we are very positive on specialty chemicals, where you have opportunity to build a CDMO business as well, and as well because there is a less competition. So we are positive chemical, and at the same time, what is happening in the globally, every country is increasing spending on defense. That includes India also. And if you see, India's purchasing orders or agreements would be seen in almost 3x in last 3 years compared to last 5 years. So the defense spending is increasing. Second point, indigenization is improving. So these two factors take the more traction on defense side at this point of time, and we are positive on these two sectors as well.
We've had a very strong tailwind in the BFSI space, as also PSU banks and private sector banks. Are you reducing your overall exposure here, given the gains that we have seen in 2025 on all these three?
No, I think BFSI will continue to do well because credit growth is just picking up, and the benefit of consumption side we are not yet to see. And big capex we expecting in basically power sector, green energy, and energy security. That is kicking the new cycle, and followed by other sectors like chemicals, CDMO, pharmaceutical, and selected defense companies. So just capex cycle is picking up, and we continue to believe this year would be a much better year for BFSI. In overall, in fact, the benefit of it goes to automobiles, CVs. Maybe MFI could be a challenge for 1 or 2 quarters, but if you accept MFI, then I think every segment, including NBFCs and banks, will do well. There will be a limited gains on treasury side due to hardening of 10-year G side, but on overall basis, business will do well.
Okay. On that very optimistic note, Patil Saab, let's call it a day. Here's wishing you and all your unit holders, your entire team, a great year ahead after a very painful 15-18 months. We hope for the best, and we also work very hard to get the best results. Thank you for your time, sir.
Thank you very much.
That, ladies and gentlemen, was Yogesh Patil, Chief Investment Officer for the equity part of LIC Mutual Fund. Thank you for watching. Please remain glued to Business Today Television. We are covering the markets like no other channel. Thank you.
The world's most powerful double-engine coverage, where access meets expertise. Davos Brainstorm, 19th to 23rd January, only on India Today and Business Today.